data for July seems way too bullish. I'm going to share that with you in today's video. Essentially, it consolidates and then pumps, and it consolidates while the masses aren't looking. And what we were using for that was the average true range, plus a few other pieces of a few other indicators there. But essentially, the average true range lets us know that the interest is dying off, and we can definitely see that. We've talked about it on previous videos. And then eventually this thing basically breaks out, providing we are in the macro bull market. So providing we're in the bull market, you essentially see these periods of stealth and then nice big breakouts. And by the time it's broken out, it's almost too late, or it destroys your psychology. And so there might still be a big move left in it, but to get to that point, now that you've seen the consolidation and then you see the breakout, remember, you don't know what's coming on that black side of the screen. By that stage, the market could have done 100%, 150, 200%, maybe not in the case of Bitcoin, but in other cryptos. And by that stage, your psychology is screwed. For the NASDAQ, I think it's on this chart here, we can see that it's followed pretty closely, if you could say that, to Bitcoin, or Bitcoin's followed the NASDAQ in that sense. Prior to that, though, it hasn't always been like that. So I'm not suggesting at all that it has to be like that going forward. It moves in ebbs and flows, and at the moment, it seems to be somewhat in lockstep with the NASDAQ, but that can change. You can see through here that Bitcoin had the bear market, had a nice pump out, then another correction, whereas the NASDAQ was just grinding through this period. So it wasn't going on a major bull run like it did from 2020 into 2021, nearly 2 years there in total. But it was just this constant grind until it was able to break out, then had a nice significant correction there. So just in the last, or recent history, the last few years, corrections happen on the NASDAQ, which is the white line, correction happened on Bitcoin, which is the candles in the background, and then they basically moved up together as well. And only recently, in the last couple of months, NASDAQ's gone pretty gangbusters in the last couple of months, from your April low into May, June, into the rise there, into new all-time highs, whereas Bitcoin found its peak in March like the NASDAQ did, but it has not been able to break past that top yet. So that's possibly a little bit too short-term for the confluence here between the two markets, but something to keep in mind, especially moving forward into this everything bubble and markets basically going a little more ballistic. And I've got some other data on that as well with, is this a bubble? Obviously, we've had Nvidia taking off for the NASDAQ, and Apple going to new all-time highs, and Microsoft at new all-time highs, and it's just a few stocks that are doing that. But in terms of bubble territory, this tweet here, I think, sums it up pretty well. We seem to have forgotten what a true equity market bubble looks like. So a true equity market bubble looks like. You might think we're in a bubble now. Maybe we are, but we won't know until afterwards. But we're just looking at the data here for the last 100 years. So if you want to look at data for the last 5 or 10 years, by all means. But I prefer to go back as much as possible. And for the S&P, we can go back to the early 1900s. So why not? Let's take all of that data. The orange line is the 1924 to 1929 move. So basically the move into the 1929 peak, and then obviously the Great Depression after that. The blue line is your dot-com bubble, then into the 2001 and 2 correction from that point. So you've got bubble lines at the back here, but then on your pinks and your greens, 1960s, we're getting into some inflation at that point. But then most recently, the pink, you can see that the line is very much nowhere near these bubble territories. It had been moving into the bubble territories, or along the same lines as the bubble territory, up until roughly 2021. But then you had the correction in 2022. 2023 was the move up, and now we're into 2024. So this could take off and get to that price there, and then be considered something similar to that. But as you can see from the numbers themselves, roughly 186, you almost got to do a double, just less than a double to get to those prices. Put this chart together about 12 months ago. I believe it was a little longer. What I was trying to do here is figure out if there was a pattern in the S&P 500 in terms of its price movement and how it breaks out to new all-time highs, corrections, and what that means to Bitcoin itself in terms of the Bitcoin price. Now we can throw this up here, new price scale, put the Bitcoin line on it. Throughout the Bitcoin bear periods. The bars in the background gets a little bit messy here, but the bars in the backgrounds is the S&P, and the orange line is Bitcoin. Now, the orange line is going down. That means Bitcoin's in its bear market, and you can see there I've covered that the box here, that's Bitcoin's bear market. For the S&P, however, it basically went sideways throughout that period. Yes, it had a little bit of a loss, but essentially you would agree that's basically sideways. And then it started to move again and then took off to a new all-time high, correction, another new all-time high. And then by that stage, Bitcoin is in its bull, breaking into new all-time highs and going pretty fast to the upside along with the stock markets. And you can see the stock market in the background here is basically straight up. If I hide this for a second, you can see that the monthly swings are basically all straight up until they break and it turns into a bear market, and everything basically turned into a bear market at that point. So it looks like we're in that sort of stage again where the S&P has had its first correction, and that's what I uncovered here, where S&P moved into a new all-time high. It has a correction and then tries to stabilize again before it goes on another move to another new all-time high. And then at that second point, that's when Bitcoin gets into its crazy state. At first, it was looking like Bitcoin would get into a new all-time high on that second move for the S&P, but Bitcoin has now hit a new all-time high, but it has also corrected when the S&P corrected. So here's your orange line. It corrected, S&P corrected, and now it looks like the orange line, Bitcoin, is consolidating again before the next move up. So basically, just looking back at that data, that's essentially what I uncovered here with the S&P overlaid with Bitcoin. So I think we've still got another move like that coming up. Whether it's in July is to be determined, but I don't think, just based on what we're seeing with the price action, that it will happen in July, or if it does, it's probably later in the month. I think there's probably still a few more weeks to go until you break out into a new all-time high. But I think Q4 is that party time based on what we've seen previously with the S&P. You've got this sort of longer period and time frame. It's from here to here, so roughly about 22 months. If we look at 22 months from that period when Bitcoin hits the low until that breakout, it takes you to roughly around sort of September, October, basically the end of Q3, before things really seem like they're into this party vibe. So from here, this is obviously Bitcoin chart. This is the major one that I want to have a look at. Where are we right now for BTC? And we are, or for July anyway, it'll be roughly 20 months in from the low. So I'm going to measure these timeframes from the cycle low. So you got the cycle low there, November 2022, 20 months, July, that'll be next month. Okay, we get the point. What happened last cycle? 20 months in, you had August 2020 breakout, and I'm looking for when does that move begin? Because essentially, I want to be positioned at or slightly before the move. I don't want to be too early because maybe things can keep going down, but I don't want to be too late because getting in late, as you've got here, your psychology is absolutely screwed. And I'm going to say screwed because I'm not going to use the F word here because I know some people watch this on loud. Anyway, looking back at the previous cycle, 20 months in, where are we at? Because that's where we'll be for July. So the first cycle, 20 months, it basically started the move out of that position. And I've got it labeled here as like a last chance because there's a reaccumulation before another breakout, another reaccumulation before the final peak. And underneath this box, I said, your psychology got effed. And it doesn't look like much there, but at the time, here is the breakout bar on the 20th month, breakout of this accumulation here. And from that low, because this is what you're doing in real time, to that peak, is 200%. So at the time, your psychology is going to be absolutely destroyed by that point. That's why I'm trying to make the point here that it's really important to be ready with the market now before you get to these big breakouts, because you just don't know how fast they'll go and where they'll stop. To the lows of these bars is roughly 88%, but to try and catch those lows, obviously we know it's a pretty difficult game. So anywhere within that month following the peak there, 90% up to 150%, right? So it's a bit of a difficult game to try and get in again after the break. It's not impossible, but just know that if it is still heading up from there and you've got another opportunity at a higher low again, that to try to figure out that your psychology is probably going to be a bit screwed, because it wasn't too long ago that the price was, 50% cheaper, and now it's at a higher price, and it's likely going to continue up from that point. So that's the 20th month breakout on the first cycle. The second cycle going into that 2017 peak on the 20th month, you can see it was an inside bar, and then it started going. In terms of the percentages from the close of that 20th month to the peak, it did 120%. So you're looking at it just a few months ago on the breakout. It's not too bad, but then as you get into that final move before that correction, for this particular box, it's going to be very difficult, because you could look back just a few months ago, the price was $600 and now it's $1,200. It's difficult to grasp that in a short period of time, and then hopefully get on board for that next final ride, because you've got another several 100% in the move. Going forward again to the next cycle, which of course was the last cycle, 20 months, as we had a look at, it's roughly around this period here. And then this really didn't give you an opportunity to get back in, except for the 21st month. There was one correction there, and then from there it basically just took off. So some of us remember that 2021 move. It basically just kept going, and there wasn't really another opportunity to get into the market. So that's also something to keep in mind. And now you can see why I'm placing so much emphasis on this particular time here. If you're going to miss out on any sort of positioning here, whatever suits your plan, if the market is to go higher, just be aware that it will most likely screw your psychology as it goes up, because you've gotten used to the prices here between 60 and 70 grand. Sure, it went to 56, whatever. Okay, so around that sort of 60 to 70 grand. You're sort of used to that. Then once it starts to break out, a lot of people will be hoping, oh, okay, it broke out, it tested it, it's going to come back. I mean, it could, but the probabilities drop off because of the consolidation that the market is having now above some of these previous tops, mostly sort of the closes in 2021, so the monthly closes there. We're looking at the macro time frame here. Thanks for sticking with me throughout this video. I know I haven't felt the best in it, but I'll be back with another video very soon, and hopefully 100%. Like and subscribe. You guys know the deal. I'll see you at the next one. Till then, take care. Peace out.